And so really there's two buyers here, right? First buyer is the trust that buys your asset for 10 million. Then he immediately sells it to the ultimate cash buyer and receives the cash into the trust. So how does this all work? I'm glad you asked. So you have assets to sell. And so to watch how this would work, let's imagine this was a $10 million asset. It was a business in New York, New Jersey, California, or really anywhere. And you have zero basis. And let's just say California for right now. Let's just say it's actually a C corp. We're working on a C corp deal right now, where they're in excess of 50% of the gain is going to be hit with capital gains tax. And so they have a zero basis. Let's just say they're selling for 10 million. 5 million is going to be hit with tax, right? And so instead of paying that tax all at the closing, the seller is going to sell to a third-party trustee in consideration for a secured DST installment contract or an installment sale, okay? And you say, well, what is this secured? Well, the security is on the collateral which the investments are made into. Well, what's that? Well, it could be stocks, bonds, mutual funds, investment real estate. It can be hard money lending. It can be a new business venture that you start and go. And so again, you can diversify the investments, and that's great because the collateral is not secured against just the asset you sold. And someone might say, well, why not just do a traditional installment sale? Well, if you did that, you would have to count on that one buyer, and that one asset, this asset you sold, and the funds will not be liquid, not diversified. And so by using the Deferred Sales Trust, we're going to unlock that flexibility to put into other things that make more sense, and perhaps even make more cash flow and have less risk because it's diversified. Okay, so and also maybe it's better opportunities. Okay, so that's what happens at first. You sell it to the trust. The trust gives you this promissory note. If you haven't received funds at closing, you're in a deferral state, or whatever you haven't received. Okay, as long as we set it up prior to not only the close of escrow, we also want to make sure we set it up prior to the buyer removing contingency. So if you're looking at this and say, what's the timing of all this? Be early. We work on a conditional basis, 100% conditional. So you don't pay us unless and if the deal closes and you actually use the Deferred Sales Trust. And if any reason you want to not use the DST, you don't owe us. You're not obligated to use it. So, but it is really important that we set this up prior to certain timeframes within the escrow period, or even ideally even before you list the property, you're working with us. Okay. Okay. So that's how that would work. You get an installment sale, and the trust itself would turn around. You get a promissory note via an installment sale. The trust itself would sell it to this buyer, and then the buyer and cash buyer, they can also have a loan. Don't be confused with that. The buyer puts the money into the trust. And so really there's two buyers here, right? First buyer is the trust that buys your asset for 10 million. Then he immediately sells it to the ultimate cash buyer and receives the cash into the trust. And so the trust is in the business of buying and selling assets. And then that's the business purpose it's in. Okay, so that's how the Deferred Sales Trust works. The cash buyer takes the asset, they're out of the picture, and you're left with a promissory note. And then again, we structure that promissory note to pay you back over time, and then you'll slowly pay tax.